But unfortunately, because of technical difficulties, we're having a problem seeing Tammy, but I think everybody can hear her. So we're just going to do kind of a question and answer. And I'm actually going to do this live on Facebook. So hold on just a second. Okay. No, hold on. Okay. So I am here with Tammy Simon, and for any of you guys who are just now joining us, I apologize for having some technical difficulties this morning, but we should be able to still get all of the really good information from Tammy. Our office has worked with Tammy for how many years, Tammy?
35.
35 years. So that is a long time to have a relationship with somebody. She has probably done more closings than probably any other lender in the Louisville area. So having her on this call right now is a really big honor. She knows her stuff. And one of the cool things that Tammy can do is at First Harrison Bank, she can do a lot of stuff with construction loans. And I know that is huge right now because of the inventory being so low. A lot of people that maybe weren't thinking about doing construction loans, or even maybe borrowing to rehab or something like that. There's been a lot of limitations on some banks, but First Harrison has really come out ahead and really does an amazing job. We do tons of new construction loans for them. So Tammy, do you want to tell, there's a couple different ways that you can do a construction loan. Do you want to talk to our listeners today about just the different ways to do it, what it can look like?
Sure, we at First Harrison, we could do self-build construction, or we can work directly with your builder. There's two different types. There's one where you already own your lot and you're wanting to construct a dwelling on that lot. We look at that as a refinance, but we also look at it as a purchase as well when we're doing the construction. So we would take your lot that you own, that's your value that you need for your down payment for the construction loan. So you already have skin in this game. We do like you to leave the lot in your name. If the builder would like to be added to that lot, we always have English law prepare a quitclaim deed from you guys to the builder. If the builder does not wish to be on that, then it just remains in your name and we close as is. We like to, on our construction loans, we like to have 20% down.
But as long as so if you have that piece of land and that piece of land is going to be worth 20% of what the constructed home is going to be worth, is that all that they need?
That's all they need.
Okay. What if, how do you guys go about determining how much to lend?
Okay. What we do is we take your plans and your specs that you receive from your builder. We also your land that you own. We take those two items. We have an appraisal completed on that property. Whatever that appraisal comes back at, we can lend up to 80% of that.
So that's where the 20% is. What about, I know that sometimes people may be building in a house or building in a neighborhood where, max value is going to be 250. But they want granite, they want marble, they want all these upgrades. How do you handle that? Because you can price yourself out of it. I mean, with your,
absolutely. You can always overbuild for the area that you're in. I mean, the appraisal is going to be the important piece of this. And when upgrades like that are completed, we definitely want to see change orders because there is some value to that. But does the appraiser now, where 6 months ago he stayed right in that area, does he need to go 1.5 miles away? Does he need to go 3 miles away? Those are important things. But you definitely, if all your sales are generated right there in that one area, I mean, unfortunately, you're going to have to pay for those upgrades, some of that out of your pocket. You might get some value for it, but it might not be the 100%.
So with the lumber being what it is right now. What are you guys seeing about that? I heard about a builder the other day that, if the person didn't increase their value 30%, they couldn't afford to build it anymore based on what they had given them an estimate at a year ago. What have you seen any of that?
Absolutely. We have seen lumber packages price the client out of purchasing that particular home. They've had to go back to the drawing board, do new plans, new specs on that property. So therefore, we have to get a new appraisal to see where we set at.
And have you seen anything fall through, or does it usually, in your all's experience, because you do so many of them, have you seen, what have you seen? Have you seen?
Right now, new construction is so good that it's kind of following the market. So if the lumber prices are going up, maybe this house that was already constructed might have sold for 300,000, but now that new sales price for that area is 330. So by the time that home is completed within a 6 to 9 month period, the appraisal value should be there.
Okay.
Honestly, it should, because there should be some sales that support that.
Yeah, that's true. So what about if, do you guys consider like a spec, if somebody it's partially constructed and they fall in love with this house that the builder, maybe financing fell through for the other buyer, or, what have you? What does that look like if it's midway through? Have you guys picked up any financing that way, or what does that look like?
And we actually, that way, and the builder is doing it as a spec home, that loan is already in that builder's name. We can go on a conventional loan, we can go up to 95% LTV. On an FHA, of course, we could do the 96.5, or if we do a VA, if the builder's VA approved, we could go 100%.
Okay. So there's, so you're going to have your clients that have the land already, and you're going to have the clients that, the builder already owns it. Do you guys, I know you do, but tell us about what it looks like if the builder's going to finance that.
If the builder's going to finance that, that is a right out purchase deal, because the land and everything belongs to the builder. So we could go, like, once again, we could go to that 95% unconventional. We could also do 100% VA. We could do FHA. We could follow those guidelines of any product that's out there. So as long as it stays in the builder's name, we can do maximum financing.
So let's say we have a client that falls in love with the development. They want to buy the land. That's obviously a purchase. They can either sit on the land for a little bit, or they can go ahead and start construction right away. Can you tell them about the construction to permanent financing, how that all works?
Let's say you go out there, and also if you're building in a subdivision, they also have restrictions of how soon you build. But the lot financing, you can go up to 5 years on that. So, of a build. So let's say that you're not ready to build this year, maybe in 2 years, but you found that lot out there and there's not a restriction that you have to build. Absolutely, we're willing to hold that for that time frame. We're not at 12 months, you have to build within 12 months. Our construction loans, though, time, once you do start the erection of that property, you are on a 12-month time frame. So, of course, with COVID and lumber packages being delayed and other items, there are times that we've had to extend our construction loans.
And that's one of the things, guys, that I think is really great about First Harrison, is because not only do they have the construction, but that's treated as a portfolio loan. So they don't have the restrictions and the requirements as like a conventional on the initial build. So if it makes sense and there's some underlying reasons and it's legit, they can work with clients on that, which I think is really, if it makes sense, then, that's awesome. With gosh, I forgot what I was going to say. With the change orders and stuff, like, do you ever have to tell people, like, hold on, like, you need to, you keep a pretty close eye on all of that kind of stuff, right?
We do. Every time that you ask for a draw, and appraisal is ordered to make sure that either we're not too far over or too far under on this deal, because it does become important to where, hey, we're laying the floors and, we went from linoleum to tile. That's going to be a huge difference in price. And that $10,000 to $15,000, that could truly make you or break you on this deal.
For sure.
On new construction, I don't like to do high ratios. Some of these ratios can go up to 40-45%. I really think that 40 or below is a good place to stay on a construction. Probably even lower than that, especially if you think you're the type of person. And I try to find out where you set it. Are we going into this and we're going to be strict on our budget? Or do we have like a 10 to 20% overage? Do you have a savings that if you did go over, you could pay out of your pocket? That's really, really important.
And I think that's where, sometimes people, I know a lot of our callers right now are callers. I say callers because I feel like I'm on a radio show because I can't see you. But I know a lot of people on here right now are agents. And sometimes clients will just reach out to the builder and the builder will take control of it and just do all of it. But I know a lot of these guys have been showing people houses. Maybe there's nothing in the inventory. So now they want to help their clients in building a house. And I would think that's where an agent would be invaluable, is to kind of know your client, know who's going to be more likely to push the envelope on the granite, and then working with Tammy, working with you or, whoever on that financing. So what does it look like, because I know you've done so many of these, what does it look like for an agent who hasn't done new construction and they're thinking about doing this? Like, what are the things that you would say, like, hey, these are the top 5 things that you really need to tell your client about? Or what do you like it when when an agent does that some of the other agents don't do? Because I know we've all seen some people that do a better job than others. So, what are your tricks of the trade for any of these agents out here that are listening, and for one, to make the process seamless for their client, or as seamless as possible, and 2, to explain how that value add comes from an agent where they might be like, we don't need you anymore. We're just going to work with the builder.
Well, I'm going to come back and say on that one, I'm really for the agent doing this. And I'm going to tell you why. It's because they really have control of that client. And a lot of times, if it's just builder client and there's a change order, I'm not made aware of it. If there's an agent involved, I need that addendum that says we're going to change this. It's not always that the change is a positive. There's times that people are like, I really don't need that. I'm going to take it off of this. Well, guess what? We need to know that because we priced you as doing the upgrades. And when we're completed with this file, we need to know that the work that you said you wanted done on this home has been completed to your satisfaction and our investor satisfaction.
That's a good point.
So having that file and being very detailed is huge.
Right.
And I'm a big believer. I'm just going to say, if you come to me with a $200,000 contract, probably by the time we're done, that's going to be $220,000. I mean, and I want to look at everything worst case scenario. And I mean, that will protect you in the end as well.
For sure. And I think that's where, with the agents being a part of the equation, I think also sometimes, even the best builder may say, I'm telling you, I've done a million houses like this. You maybe don't need a home. You don't need a home inspection. An agent will say, yeah, you do. I actually got a phone call just the other day on somebody that the client decided that they didn't need the home inspection and got in and started seeing a couple things weren't working. And then they're like, you know what, let's just get a home inspection now to see what maybe we missed. And there's some stuff, man, there's some stuff. So I would say if you're an agent out there, it is a really good idea. One, I'm always going to tell you to get extra protections, right? But that owner's title insurance is so important because mechanics liens can be covered if the builder didn't pay somebody and then you find out later there's some plumber that never got paid, that could be covered. A survey is important because just, the survey of a proposed build is not the same as a survey of a build. They could have had the stakes that, somebody knocked it over, they moved it over 3 feet, and now you got some fire code issues. And of course the fire department, like, they will come out and look at habitability and stuff like that. But I've seen it where they had to build a window because it was a Norton Commons and it got too close. The houses were too close. So now they had to pay to cut out the brick and put a window, because that's the only way that they could have the fire department, be okay with it. And in this case, this person came to us. The contract was long since signed. They'd been working on this thing for months. They didn't have an agent. And so, they started to feel very uncomfortable because they were like, this builder, I don't know, like, at the end of the day, the builder was doing what they needed to do, but they felt like they didn't have anybody protecting them and looking out for them. So this has been years now, but so there is a question here for, is this being recorded? And it is, and I will put it on my Facebook page, and I'll also put it on YouTube and on our website. So anybody that wants to hear this. So what else would you?
Colleen, when Philip and I purchased our home I think it was 22 years ago, we had World Home Inspection do even though it was brand new construction. When they were completed, they came out and found that our house had been wired backwards. So that had to all be corrected. Now, could we have moved in? Yes, but they said eventually we would have had a fire. So it was, everybody's like, why would you get a home inspection on a brand new house? Trust me, there can be things go wrong. So it's very, very, very important.
Yeah. And plug World Inspection Network was my brother's at that time. Now he's English Inspection. So Bob English does a great job.
Yeah.
He'll find the backwards wiring. So with is there anything else that you would tell an agent that, like, now people are looking, they can't find anything? I mean, my gosh, I think the last time I looked at the GLAR in the greater Louisville, just in Jefferson County, 40% down a couple weeks ago for inventory from last year. And last year we didn't have a lot of inventory either. So this is something that's not going to go away. What would you tell a client? I mean, you talked about a little bit about FHA, because some people may think like they can't afford to do a new construction. So can you talk about how FHA looks different than conventional just on the construction, like the permanent financing thing?
On the FHA, it's going to be where the builder has to own the property. They would need 3.5% down. It's an excellent, excellent product. So, there's absolutely so many different products out there. And it's going to be according to where, the builder has to be FHA approved, of course, but 99.9% of them are approved. So if not, then they go through some additional inspections through the phases of building. There's different permits that they have to provide to the appraiser to make sure that they did follow guidelines. So, there's ways to do that and them have new construction, but mostly on FHA, it stays with the builder's hand.
And I didn't even realize that, but it makes sense. Because how could you pay for the land?
You're not going to have your 10 or 20% down or anything like that. The big thing that we're seeing right now, and this is probably what I would, for the agents that are out there and on the call, and unfortunately I can't see all that right now, but it's huge right now. We're getting contracts in over listing price, $10,000 and $20,000. And I'm just going to say to the agents, we've seen some fallout, because if that appraisal comes in low, you've now held that property up. Whatever you do, please comp that house for an overage to make sure that, you're in the end, you're not going to have an unhappy client. Because we're starting to see on some of those contracts where appraisals are coming in low because appraisers are not going to push that envelope. So it's very, very important that, you know, if you write a contract 10 and 20,000 over, make sure your client has cash, not cash, but money in the bank to cover that difference. And the second part is find a house that's sold for that value. Because if you're expecting us to come up with an appraisal that supports it, find a comp to support what your client offers. That's huge right now. So
that's really, really important. We were, this is about construction loans, but again, I talked about the portfolio thing. I mentioned it for a second. Can you tell them just a little bit, you're on here giving us your advice and everything. So I'm going to kind of toot your horn for you. As far as First Harrison, and I know you guys do all the products out there, but talk to them a little bit about portfolio lending and how that can look a little different for some of your clients that may not be able to just walk in a different bank and say, hey, I'm not your typical person. What does that look like?
I'm gonna start from what I feel is important to where we're gonna end at, hopefully, have an end at. One, we do manufactured housing. I know a lot of lenders will not do that, but FHA and conventional will allow that. That is a double wide trailer that came on an axle and was delivered to property. FHA will allow up to 3.5% down payment on those if you're interested in doing that. Some conventional products are 80%, 90%. It's going to be based on truly your credit score. And then I'm going to go to the next big thing that is starting to get waves. Modular homes. It's considered a stick-built house because it comes to your property on a flatbed truck. It is put together like a puzzle. So we consider that a stick-built home. We can go up to 95% financing on those. So if that is something that you're interested in, let us know that. This is where our portfolio comes into play. Let's say that you're driving down, let me just say the Gene Snyder off Billtown Road, and you see this old rundown house on property that you just absolutely love. The windows have been broken out, the plumbing's no good, floors are falling in. But you want that property and nobody will finance it. We are definitely willing to take a look at that for the rehab contract of what your contractors are going to say that it will take to bring that property up to a livable condition. So what we do is take the offer that you make to the client that is selling that home. Let's say it's $100,000. But let's say your contractor says that it's going to take another $100,000 to get that up. We would treat that as construction rehab. You would be required on something like that to have 20% down. Then once all the rehab work is completed, that is when we would flip that to a secondary market loan, because now you are meeting all the conforming product requirements to take that secondary market. So that's something that we have that many do not offer out there.
What kind of interest rates do you have on those?
On that, you would be looking at about 5.25 because that's a 12-month loan. We would hope that you will have rehabbed that within the last 12 months.
Do you make a payment on that?
Interest only.
Okay.
Interest only payments on that through we consider it a construction phase. And we do inspections just like a construction. Every time that you ask for a draw from that property, we're going to send the appraiser back out there.
So just to recap, in case I know that there's been some comments about the audio on this and everything, and I apologize, you guys, but just to kind of go over and correct me if I'm wrong on this stuff, Tammy. She was saying that, there's manufactured homes, which is actually, you're going to have a VIN number. It is, we would probably have to convert that to part of the real estate. That's one type of loan that they can do, and they can do FHA and conventional on those. Another type is modular homes, where it's just the way it's built. It's considered the same as any other kind of a construction for a house. It's just the way that it's built. It just comes on a truck and it's put together like a puzzle piece. So they can do those kind of financing as well, where some other banks may not be able to do it. And then also rehab loans. So if you see a house that's dilapidated and you want to do, you want to fix it up, what you would do is get a 12-month interest only, which runs about 5.25% right now. Again, don't quote me on that because this stuff changes all the time. But then they can just do that and do it kind of the same way you do new constructions, where it would be a proposed appraisal, and then they would go out and do inspections, and you would have draws and everything like that. Is that right, Tammy? Did I get that?
That is correct.
Okay.
That's correct.
Okay. And somebody just said with modular, a lot of times people are now calling that prefabricated. Thank you, Mimi, for that. So there are a lot of different options out there for your clients. And I think that sometimes we get pigeonholed into thinking if it's not on the MLS, maybe, or maybe it's an estate and somebody's just been sitting on it. And if you can find out who's in charge of that estate, we may be able to do the title work and get it all done. And then they could, get that location that they love with a house that, is kind of a blight to the rest of the community and do everybody a favor, really.
Right.
Yeah. Do you guys have any questions for Tammy now that we're on this? Oh, do you have a specific, here's a question. Do you have a specific draw schedule?
It's going to be determined by the contractor. Like if the contractor thinks that there will probably be 3, they'll list it in the contract, the realtor or the contractor. Most of the time we see 3 to 5 draws. I mean, I've seen it up to 7. So, I mean, you're going to determine that. Just know that every time there's a draw completed, that an appraisal gets completed and also a title update. So you've got to take that into consideration as well.
And I'll tell you guys I'm sorry, go ahead.
I was going to say, like you were saying earlier about the title, we actually had an attorney that closed the purchase for an individual. That individual is now selling their property. I have the client buying that property. And when the individuals purchased it, the attorney, I'm not going to mention any names.
It wasn't us. It wasn't us.
No, it wasn't you. They told the client it wasn't that important to have title because owner's title. So guess what? Now we're battling liens of over $15,000.
And if I remember correctly, I think that attorney did a current owner search, so they didn't even pick up anything from a prior owner. So
yeah, that's all they did. So
yeah.
Bad. So I mean, how far do you guys go back on the title search, Colleen?
We go back 30 years. And I will say, guys, like, so when your client buys the lot, okay, we will do an owner's title insurance policy. We can do it either on the lot value or we can do it on the construction value. As long as it's not fraudulent and there's actually going to be there, we can do an owner's policy. Now, the bank usually doesn't require a lender's policy for those short-term loans. Okay, so the client saves money on not doing a lender's policy at the front end. They usually get an owner's policy, as they always should, because usually they're not going to go back and buy it later. Let's just be honest, they just don't do that. But then when they go into permanent financing, they get to get a reissue rate, like a refinance. So they do save some money on the front end with the closing, because First Harrison, for those construction loans, usually doesn't have us put a lender's policy on it. We just give an opinion and they're like, okay, that's good. We go back and do the 30 years and we usually put an owner's policy on it. But for the bank, they save that money in whatever that lender's policy would be. Now they have to purchase a lender's policy when they refi. But does that make sense? If that doesn't make sense, give me a call. I can tell you what that looks like. But I mean, that is one way that First Harrison kind of saves money on that, because I know some lenders, will also make them buy a lender's policy for the initial draw, like that amount, that loan, and then again when they refinance into permanent. So there's that. But again, we always recommend that you get an owner's policy. Even if you buy in a lot and you're not planning on doing anything for a while, get the owner's policy. You can go back later and increase that premium if you want to. The truth is, most people don't even think about doing that. But just remember, if there's a claim, the only amount that the owner's policy is going to cover is whatever, maybe 50,000 for the lot, or 100, or, depending upon what area of town you are. Some of these lots are really expensive. So, but anyway, so we can kind of show you what that process looks like for all of them. But I think that new construction is super exciting. I think that a construction, buying a house and then doing the, the upgrades and everything for something that you've been passing and it looks like it's falling apart, like that's super exciting for our community. So there are tons of different options. And I think one of the first things that if your client's thinking about doing this, talking to somebody that knows about the different options, because I think a lot of people don't realize you can, if you don't have 20% down, that you could potentially build, and that's exciting for people. So,
right.
Okay.
Yeah, and I would love, any questions that you have, I would be happy to try and answer them. I truly, you want to say you've seen it all, but then guess what? Something else pops up. But I pretty much have been through everything in the mortgage business, so I definitely think I would have your answers that you need. We have wonderful products here. Our processing and underwriting is local, which is a major plus. So definitely, I would love to help you.
Well, thank you so much, Tammy. Again, guys, I'm sorry that the video didn't work out. I love to always see Tammy's smiling face. But if you guys have any questions, as always, let me know. If you have another topic that you want us to talk about, please let me know. The next one we're going to do is it's going to be about insurance. And I'm going to have Michelle Schuler from Stack Insurance talking about people that are now using their homes as home offices, what that's going to look like. Any upgrades to outdoor living spaces and what that looks like with homeowners insurance, pools, all those kind of things that all these people are putting onto their houses. So, Tammy, thank you again so much. I have a list of everybody who's on the call. I'll send you an email with Tammy's contact information, my contact information, but thanks a lot, you guys. Have a great day.
Thank you all.
Thanks.
Bye now.
Bye.